This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regularly with short business episodes, short private equity episodes, interviews with brilliant leaders in private equity and in business, and then sometimes periodic irreverent podcast episodes based on life. Today's discussion is Tesla, Rivian, and Lucid Motors, the good, the bad, and the ugly, 7 key points. So that's today's title. So first, in terms of vehicles being sold, and these are estimates, but to give you a sense of where we're at, Rivian is selling about 50,000 vehicles a year, on pace for a little higher than that, maybe 50 to 60,000 vehicles a year. It's priced relatively high. Tesla is selling approximately 1.8 million vehicles a year, and again, not an exact number. And Lucid is selling less than 10,000 a year. Right there, that gives you some makeup of the market. Tesla's the clear winner. Rivian is making progress, but still very low numbers to really build a car company around. And Lucid has numbers that just don't work as a car company. Second, Lucid stock is down about 60% over the last year, and basically will have a very hard time surviving long-term based on the number of cars that it's selling. It was originally founded in 2007. Third, probably one of the most fascinating parts of this is Rivian. RJ Scaringe, I don't know if I'm pronouncing it exactly correct, who's 41, founded Rivian in 2009. Its stock is down 85% over the last 5 years and 30% this year. RJ had become a multi-billionaire, but now that's gone back down as the stock has gone down in value. The stock recently rebounded significantly on a potential or an investment from VW. We'll talk about that in a second. Rivian is still losing tens of thousands of dollars per vehicle. So that's a lot and also not sustainable. That's our third point. Fourth, Volkswagen recently did a deal that in some ways saved Rivian's bacon. It invested $1 billion in Rivian and another $1 billion in a joint venture with Rivian. More money will be invested based on hitting certain targets. It looked like Rivian was falling off a cliff prior to this deal. So that was really a saving grace for Rivian, and the stock's rebounded nicely the last couple of weeks based on that deal being announced. Fifth, and I remember this because I'm an investor in Amazon, and I remember when Amazon took a big loss on the Rivian stock, Amazon is still the single biggest shareholder in Rivian. And when Rivian went poorly a couple of years ago and took a big write-down, Amazon took a huge write-down. So that was, indicative in what happened with Amazon stock that year. Sixth, Tesla remains the clear leader amongst U.S. firms in EVs. Its stock is up about 6% or so this year. Again, Rivian's is down about 30% this year, 85% in the last 5 years. Tesla itself has about $10 billion in debt, just to give you a sense of their balance sheet. But again, selling enough cars at scale to make a real car company. And then has all these other technologies that it should be able to license and sell as well at some point. Seventh, in terms of Rivian, Rivian has about half the debt of Tesla, but again, sells just a fraction of the cars. It's either going to have to sell or license its technology or sell a ton more cars to really survive and thrive. And we'll see how its joint venture on technology goes with VW, if that's a saving grace for it as well. Again, the good, the bad, and the ugly. Tesla, Rivian, and Lucid, 7 key points. I hope somebody finds this informative. I found it interesting learning more about Rivian and just the sheer numbers difference in cars being sold by these 3 companies. Thank you very much for listening to the Becker Private Equity and Business Podcast. And thank you every day to remarkable producer, Chanel Bunger. I also want to thank the reader. There was a reader that had messaged me who wanted us to do some discussion of what's going on with Rivian. That's what led us to talk about Rivian, Tesla, and Lucid Motors. Again, at any time you have a suggestion for a topic, 773-766-5322, or message me on LinkedIn or find me. And if we could do it, we love to learn and love to talk about what we're learning. Thank you for joining us on the Becker Private Equity and Business Podcast. Thank you very much.